Russell on the 3-minute, and then we'll break it down to the scalper. Okay, so if you are new to watching our videos, I'll quickly go over the blue bars. The blue bars mean that the move is most likely coming to an end. Okay, a down move or a move to the upside, doesn't matter. Okay, example, if you went long on this green bar, okay, you're long. As soon as the blue bar comes in, okay, you trail the stop. You don't have to automatically exit on the blue bar. It's really built to trail stop once blue bar prints. Okay, you would have been taken out right here. Okay, so market opens, comes down, blue bars. Okay, this is a 3-minute chart. So that's not saying this is the low of the next 5 days. It's relative to this time frame. So off blue bars, trail stop, we'd be stopped there on this short. Look for a correction, okay? Correction pattern completed. Next red bar, okay, is a short signal. And then it goes into yellow bars, okay? The yellow bars tell us that this contraction is ready to start a new expansion. Okay, so it expands down into blue bars, trail stop, we would have been stopped right here. Now, if you are not entering on a 3-minute, we are still looking at this chart. Okay, so let's look at the scalper, and this is that move down. Okay, so at this point, if we have blue bars, and if we were trading a 3-minute, if we would be trailing the stop and we would be stopped, okay, why would we enter a scalper trade short at that point? We wouldn't. Okay, we're using time frames to give us odds on what we should be thinking and doing. Even if we are not in a 3-minute short, but we have blue bars at the low, right? Let's say you miss this move, you turn your computer on, and we're printing the first blue bar. Okay, you know immediately I'm not going to go short even though the market is going down. Right here is not a good area to go short. Right here is a good area to cover your short. So let's follow the scalper down. Okay, there was 8.4 points arrow to arrow. Entering on the arrow, exiting on the arrow. Okay, and entering on the arrow, we're using the low of the bar, a break of that. So it's worst case fill. Okay, now there was 17.7 points of opportunity. Okay, and what I mean by that is we're not getting out right here. Okay, we're getting out on the arrow and then a close above. Okay, re-entering on the arrow, close above, close below. So we're not exiting here. So the opportunity is the expansion of the move, okay, which is impossible to catch all of that 17.7 points. So it's not realistic to think you're going to catch that. Okay, but if you can catch 8 points out of that, you are doing good. So really what I'm looking at is just arrow to arrow, taking all the signals. You can see big trend line is down, so we're only looking to go short. And the 3-minute is red, only looking to go short. Okay, here was a nice trade, arrow to arrow, 6.3 points. Okay, there was actually probably about 9-10 points in this trade, but exiting on a clear visual right here, 6.3. Okay, would you take this one right here? It was 0.4 ticks. Okay, it was 4 ticks. There was 2-3 points in the trade. Okay, but would you take that? Okay, and I would say no, because we have blue bars here. Okay, so we have a big move down, a very small correction. So, you know, it did go down lower, but on a 3-minute chart, well, you know, technically it did have a correction, so you could take it. Okay, looking at the range of the day, you know, these are big waves. So to think that from right here, a wave equal to this wave is going to happen is not correct thinking, because it's probably not going to happen. what is most likely going to happen? Probably just, if it does break lower, it'll probably be minor, okay? And that's what happened. Just barely broke that low, and that was the low. So on a 3-minute chart, we're not really interested in shorting this low, okay, after two big moves like that, okay? Not to say you can't do it, it's just the result of the trade is, as you can see, arrow to arrow, 4 ticks. Okay, it's still not a losing trade, and there was opportunity in that, in this example. But with the blue bars on the 3-minute, there is higher probabilities of getting stopped here at a loss. So let's say you did take a couple trades here, you're up 6-7 points. I would say skip this trade, keep your 6-7 points, stay on a positive mindset. Okay, now, and at that point, this was the low. Scalper goes back to green, and then we start that bigger type of correction. Okay, so if this correction would have started from this low, we would have been back up to here, getting ready for another major short that could have been equal to this wave. Okay, but the result was the opposite. It made a new low, and then that correction really just got us back to this structure high. So it didn't really show any strength there. It was just really, and off of that result, we come back down and correct. So, that's the importance of having the bigger chart with the indicators we use. And the indicators we use are specific for how we trade. So it's a visual to say blue bar low, obey it every time. Okay, not to say that the blue bars will pick the low every time. Maybe it comes up and then it falls for another 10 points. And maybe you miss that. But overall, it's better to obey the blue bars on all the time frames.